All right, welcome back again, everybody. Got another episode of Coffee with Ken with you, and I've got to talk about some pretty serious stuff today. We're going to talk about how far I'm willing to go to guarantee and protect the money that my companies are borrowing from banks and lenders just like you. Listen, if you're in real estate investing or you're in any business or area where you're raising money for your businesses, either institutional money or private money, then if you don't see what's happening around us right now and the companies that are going under, you've got to have your head in the sand. That's the only way I can describe it to you. It's really sad. There are literally, at the time I'm recording this video, there are literally 5 or 6 different major corporations that have either declared bankruptcy or the owners and founders are in the middle of declaring bankruptcy right now. And it's really, really sad. There's millions of dollars in investors' money being lost. And I want to just do have a quick little conversation with you about if you're thinking of getting into any major business where you're raising funds, how far you should be willing to go and why you should be willing to go that far. And I'm going to tell you a quick little story. In my real estate development company, we have raised significant amounts of money, tens of millions of dollars in capital over the years. Right now, in our Hay Bay Resort project, we raised $10.4 million from my personal contacts, friends, family, and business associates. And we have bank loans and other loans that are as much as that for our projects at Chelton Beach, at the Canadian Hot Tub Company, our gold mine in British Columbia, you name it. It's humbling for me because it means that the people that are putting that money into those projects, the companies that are, the institutions that are trusting me, really. Like, they see the merits of the business. They see that it's going to be a big business. We put all the documentation together and we validated our documentation. We're hiring the right people to run the places. But those people are trusting me with their money. That's the way I take this. I'm the founder. I'm the face behind this movement. And because of that, one of the things that I do that's very, very unique is I personally guarantee everything in writing. And I go even a step further than that. And I have never actually openly talked about this before, but I think it's important to, because a lot of my personal lenders and institutional representatives, they see these videos. And so this is how serious I am about protecting the money that my companies borrow. I have a key man insurance policy for $30 million. That policy, I pay $45,000 a year for this insurance. And it's called key man insurance because it protects my life in the event something happens, whether it's illness or I fall out of a plane or whatever it is. And it takes that money and I can assign parts of the money. So inside of that insurance policy, I have $10.4 million assigned to my friends and family that lent us the money for the Hay Bay Resort. So what that means is, God forbid anything happened to me, those people would all get their initial capital back. So the money's protected. So I have personal guarantees in it that said if something goes wrong with the project, my parent company is on the hook and has to give that money back. And now I've taken that a step further. And I've said, if anything happens to me, we could probably keep everything going. We have a whole contingency plan in place in our company in the event of my death. Tammy Stanley, our president, takes over. Melanie Williams, our head of legal, has instructions on what to do. We have the sales people in place. We have the market people. So everything will keep running. But it's still going to cause some bumps in the road. God forbid if something like that were to happen. So I have a key man insurance policy that protects everybody. And that's how far I'm willing to go. What's really great about this type of insurance policy is it's assignable. So what that means is the overall value of the policy is $30 million. Policy was taken out by my parent company, by my main company. I assign parts of that $30 million and I can change it. So at the Hay Bay Resort, what we did is we got $10.4 million from my friends and family. They all own stock in the company. And then once we get the resort up and running and it's profitable and everything's working well, we're going to refinance it with a major bank and we're going to give those people back their money. So if I stay healthy and everything's good, which I promise you, I believe that's going to happen. There's no health concerns or anything. I'm perfectly healthy. But what'll happen then is once I give them that money back, I'll change the assignment. So right now, there's an assignment in place that money's protected in the worst case scenario. Once we do the refinance and we give them their capital back, then we do the same thing. Same at our Lake St. Peter resort. In fact, it's all of our projects. The $30 million covers every cent in every situation that I have borrowed or raised from friends, family, accredited investors. We've even launched a mutual fund trust, and I've decided that I am going to use the Keyman insurance to guarantee all of the money in the mutual fund. Now, why would I do that? Why would I go that far? In the world we live in today, raising money in Canada is incredibly highly regulated. Today, any money that we raise, we have term sheets and operating memorandums created first. They are created by our lawyers at Castles in Alberta, and then we use our exempt market dealer, which is Atlas One, and they do all the fundraising, so everything stays compliant. You have to go to those lengths if you're going to raise money. You're going to be serious about doing it. But I want to make sure that in all cases that the people that I'm borrowing money from, whether it's $20,000 from somebody's RRSPs through our mutual fund trust, or it's $500,000 from a dear friend of mine that did a direct investment in that friends and family fundraising, it doesn't matter who it is, any money, 100% of the capital that we raise here at Cottage Dream Vacations in our group of companies, I'm going to personally guarantee it through this Keyman insurance. So down at Canadian Hot Tubs, we raised $2.4 million, all from friends and family. Well, there's an assignment in my Keyman insurance policy for every single one of those people and that money. It's all accounted for. Now, and I'm going to say, I'll just put this right on the record as I sip on this great cup of coffee. Let's have a little coffee interlude here. If you're raising money, if you're doing anything where you're borrowing capital from other people, these are the lengths that you have to go to. When you're setting up to raise money, I have an old saying that I teach the people that are in our training companies: you never get into a deal that you can't get out of. In other words, before you even buy a property, you sit down with pen and paper, calculators and spreadsheets, and you figure out all the math. How much is it going to cost you to acquire it? How much is it going to cost you to renovate it? What's that value going to be after you're finished? In a simple house flip, it's called after repair value. In a major resort like the Hay Bay Resort, we call it a stabilization value. Once you're stabilized, you figure out what that is. And if that value is high enough that it warrants doing everything, there's going to be an incredible lift, then you do the project. If you don't even get into it. You never get into a deal unless you know how you're going to get out of the deal. So I know they were going to have a significant lift with the Hay Bay Resort, which is going to allow us to refinance through a conventional bank. Plus we'll have financials now that shows how profitable the company is, and we can get that deal done. But all of this stuff is risky. And so if it's that risk and you truly are serious about proving to the people you're borrowing money from, the institutions you're borrowing money from, how serious you are about doing this, then get a Keyman insurance policy. Like I said at the beginning of this video, anytime I borrow any type of money from somebody, I put my personal guarantee on it. I put this company, my headquarters company, I guarantee them against it as well, but I take it one step higher, and I may be one of the only real estate investors in this entire country that's willing to go as far as put a Keyman insurance policy in place to protect everybody, to protect their initial capital. And that's how far you need to go. You're naive. Listen, we are all naive. We look at what's going on in the market. There is a lady in Toronto, Canada, who's in another major real estate group who literally borrowed $10 million for people using promissory notes. Promissory notes are evil. They should just be illegal in this country. It's where you get money from other people. You're signing a piece of paper, but there's no guarantees personally in it. I'm at a point now, hearing all the stuff that's happening around promissory notes, that I think they should just be illegal. I don't think we should be able to use them in this country. The difference between what I'm talking about, so there are situations where I have had friends and family lend me money for the Canadian Hot Tubs company as an example, and they signed a contract to do it. The difference between the contract they signed and a promissory note is, in a promissory note, there's no guarantees, there's no attachment to real estate. So in the case of those people who lent the money for me to do that, I had a GSA created, which means that whole $2.5 million is secured against the assets of that business. And I put together a business plan where I know we're going to take the value from $1 million to $5 million in the first year, and I'll refinance it through a bank and get their money back. Now, on top of that, I have a key man insurance policy that has $2.5 million earmarked in that policy and says that if something ever happens to me, then those people are going to get their money back from the insurance. And that's the same for all of our businesses. So if there's anybody that is one of our lenders, one of my friends who's lent us money, and I told you this, but you didn't understand it, or you hadn't heard me talk about it lately, this key man insurance policy is in play. I'm actually going through some medicals right now to update it. That's how far I'm willing to go to protect the people that do business with me. And frankly speaking, little coffee break again. If you're really serious about building a major real estate business and you're not willing to personally guarantee the money you're borrowing, you shouldn't be doing it. You should be legally not allowed to invest in real estate. If you're not willing to personally guarantee it, you're telling the people you're borrowing money from that you don't even believe in yourself.